In this presentation, we will take a look at education credits for federal income taxes, concentrating on education credits for post-secondary education or college education, an area that can be confusing because when we think of college costs, there's a couple different ways that we can deal with them on our taxes. In other words, it may be possible to deduct the college costs, and it may be possible to have a credit for the college costs. And when we think about a credit for the college costs, we may have different types of credits that we could qualify for. The general rule here is that the credits will usually have more benefit than the deduction. Remember, the credits are usually a lot higher if it were the same dollar amount, meaning if we had the same dollar of credit and the same dollar of deduction, we would want to have the credit. Of course, life is not usually that easy, especially the tax code, in that we don't usually have the same dollar amount of deduction as the dollar amount of credit. They're usually different amounts. But in any case, usually the credits for education will be more beneficial than taking them for the deduction. That's where we're at here. And then we have the question, okay, well, what kind of credits are there for education expenses? There's two of them, and we'll take a look at those two now. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Some comparisons and contrasting to them. Generally, we cannot take both of them. Usually one is better than the other, and we take it if we can. And then we take the second one if we don't qualify for the first one, if we could still qualify for the second one. So education credits are American Opportunity Tax Credit or the Hope Scholarship Credit. This is going to be one of the education credits, and the Lifetime Learning Credit. These are the two credits that will typically be available for post-secondary education, based on higher education expenses for the taxpayer, spouse, or dependents. So who can we write this off for? Obviously, if it's our education and we're the taxpayer, yes. Spouse, yes, that's part of the taxpayer, or dependents that we have on our return. These are individuals that we could qualify for or look into whether or not we can have a credit for education expenses. We're going to claim using the form 8863. That's going to help us to calculate the education credit, which we will then pull over and reduce our 1040 amount of tax liability on. Qualifying expenses includes tuition. Of course, tuition would be a qualifying expense. We're typically, remember, thinking about post-secondary education, usually college education, and therefore the tuition for that. Any kind of fees may be qualified, books as well. So we want to keep that in mind, that obviously we may be told what the tuition is. We may actually get a report, and we'll take a look at the form that we will receive, obviously most of the time from institutions, but we may have other fees, other books that may or may not be on that form that we might want to think about and include. And then other education expenses as well. Note that typically things like meals and whatnot aren't things that are going to qualify, but if it's for something that's mandatory for that particular class, like books and materials, then those are things that could be eligible in addition to the tuition possibly. Eligible institution will generally be most post-secondary institutions. So typically, if we're talking about an institution that qualifies to take like federal loans and whatnot, then we're talking usually about a post-secondary institution that will qualify. Obviously, when we go to the institution and we think about what institution we want to be in, then we probably may want to ask this question, see if they are qualified. Here is a form 1098T, and we can see here on line 1, we're going to get the payments received for qualified tuition and related expenses. So this isn't a 1099 that we have to record as income. Usually when we see a form that looks kind of like this, we're saying, okay, this is a 1099, we got to record income and pay taxes on it. No. This is something that's going to be telling us something that could be a potential source for a deduction or a credit. We're thinking about the credit in this case. This will be the base amount that we typically would use as the credit. Now note that it could be possible that we have some expenses for books or something that we might have paid to someone other than the institution, which were required materials for the course, so that may not be included in this form. So some institutions may include all of that information, may include the cost of the books and whatnot within basically the payments to the institution, and some institutions may not, and they may say, hey, you need to provide yourself with this and that materials outside of what you paid here. So this will include the tuition almost for sure for the institution, and it may include other resources that are required. It may include that everything that's required, or it may not. There may be some things that are required for the course which are not included here and possibly be includable as the calculation of a deduction. Now we'll get more specific looking at each credit. This is the American Opportunity Tax Credit, sometimes called the HOPE credit. This is the one that we typically would want to qualify for first because it'll usually give us more of a benefit. And if we don't qualify for this, then we typically go to the second credit, which doesn't often give us as much of a benefit, but is still usually better than taking the deduction. And if for whatever reason we can't get both of those, then the deduction may be something that we can take as well. So an eligible student is pursuing a degree or recognized education credential, enrolled at least half-time for at least one academic period for the year, not have finished first 4 years of higher education at the beginning of the year. So we're looking at that first 4 years of education when we're considering the American Opportunity Tax Credit. So basically college, the first 4 years of college. Not have claimed credit for more than 4 tax years. And this is going to be the big one here because the HOPE credit then is one that we can claim here and then we can't claim it again for another basically 4 years. And that's going to of course limit how much we can take the credit for. If we have multiple years of education, which we typically will, we can only take it once every 4 years. We also have to not have a felony drug conviction at the end of the year. Then how much do we get for this credit? Let's take a look at the calculation. We're going to take 100% of the first $2,000 of qualified expenses and up to 25% of the second $2,000. So that could be huge for the first $2,000. We're saying if it's a qualified tuition, we get the $2,000. It's a credit. So they're just going to be $2,000 cash back, basically, which will increase the refund or lower the amount of tax due right off the bat, and then 25% of the second $2,000. So in other words, if we had $4,000 of tuition, we can have a maximum amount of deduction of $2,000 plus another $2,000 at times 0.25, 500, or 2,500. So this credit then will give us a maximum of 2,500 if we pay over on the qualified tuition payments or qualified payments for the credit more than the 4,000. 2,000 directly. If we pay up to 2,000, we'll get 2,000 credit dollar for dollar. And then anything up above that, we're going to get 25% of it. Then we have the lifetime learning credit. We'll get into the specifics here. Note that we would rather take the HOPE credit. We typically will get more of a benefit, up to that 2,500. Lifetime learning, typically less of a credit, but we may qualify for it. If we don't qualify for the HOPE credit, we cannot typically take both of them at the same time. So we have to choose one or the other. We typically will take the one, of course, that will give us the most benefit and then default to the other if we're not eligible for the one that gives us the most benefit. So eligible student then will be for the lifetime learning credit, enrolled or taking courses at an eligible educational institution, again, typically higher education, taking higher education courses or courses to get a degree or other recognized education credential or to get an improved job skill. So that's what's going to qualify, be enrolled for at least one academic period in order to qualify within the year. Notice what is not in this requirement. There's nothing here saying, well, if you claim the lifetime learning last year, you can't do it this year. If you claim the HOPE last year, you can't do it this year. You don't have that kind of restriction as we saw with the prior credit, with the HOPE credit. And therefore, it's something that we're more likely to be able to qualify for in consecutive years. The amount of the credit will be 20% of qualified expenses up to $10,000. So we're not going to get that dollar for dollar of the first $2,000 here. However, that will give us a maximum of $2,000. In other words, if we were to pay qualified tuition and other expenses for education of $10,000 and we took 20% of that, that would be the $2,000 would be the maximum. Anything under that, if we only paid, let's say, $3,000 for the year, if we multiply that times 20%, that would be the type of calculation we would have. Once we get that calculation, for example, if we had the full $2,000, remember that is a credit, so it would be a dollar for dollar, basically cash back reduction of tax liability at that point. Remember also, we're not able to have both of these types of credits at the same time. Cannot use the lifetime learning credit and the American Opportunity Tax Credit in the same year. There are also going to be phase-outs, income level phase-outs. In other words, as our income goes up, we're going to have less ability to get the advantages of this credit. And there's going to be based on a modified adjusted gross income. So just remember that as the income goes up, in essence, we're going to have this phase out. So for single, modified AGI adjusted gross income, $57,000. Married filing joint, $114,000. That's when it starts to phase out. We'll lose the credits completely around $67,000 for single of income, adjusted gross income, modified adjusted gross income, or $134,000 for married filing joint. Here's a nice little table that will give us a comparison of the American Opportunity Credit and Lifetime Learning Credit. This is for the year 2017 from the instructions for that year of Form 8863. 2018, the instructions aren't here yet, but this will give us an idea of the comparison. Maximum credit, we have up to $2,500 for the American Opportunity Credit. That's the one we'd be shooting for. Up to $2,000 for the Lifetime Learning. Limit on modified adjusted gross income. These are the phase outs. The American Opportunity, $180 for married filing joint and $90 for single. Again, these are the 2017 numbers. Lifetime Learning is at $132 and the $66 2017 numbers. These will typically change and increase for basically inflation, cost of living each year. Refundable or non-refundable. 40% of the credit may be refundable. The rest is non-refundable for the American Opportunity Credit. That means that we can, in essence, have a loss or not pay any taxes and still get some money back, get a refund over and above basically having to pay taxes generally. When we talk about the Lifetime Learning, it's non-refundable. Credit limit to the amount of tax you must pay on your taxable income. So here, you have to have actually paid taxes or you're not going to get any benefit. Whereas here, even if we didn't pay taxes, we get some benefit. Number of years of post-secondary education, available only if the student had not completed the first 4 years of post-secondary education. And this is again 2017, whereas the Lifetime Learning, available for all years of post-secondary education and for courses to acquire or improve skills. Much big difference here. So this means we're going to qualify much more for the Lifetime Learning, multiple years for it. Number of tax years credit available only for 4 tax years per eligible student. Includes any HOPE credit for claim. So over here we have available for an unlimited number of tax years. So big limitation from one to the other. Type of program required. Student must be pursuing a program leading to a degree or other recognized educational credential versus student doesn't need to be pursuing a program leading to a degree or other recognized education credential. So much more lenient again in terms of the Lifetime Learning Credit to be able to take it. Number of courses. Student must be enrolled at least half-time for at least one academic period beginning 2017. Again, these are 2017 instructions. 3 months of 2018 if the qualified expenses were in 2017. Over here, available for 1 or more courses. And then we have the felony or drug. I won't go into that. Qualified expenses, they include tuition, required enrollment fees, and course materials that the student needs for a course of study, whether or not the materials are bought at the educational institution as a condition of enrollment or attendance, versus tuition and required enrollment fees, including amounts required to be paid to the institution for course-related books, supplies, and equipment. And then we have payments for academic periods, payments made in 2017 for academic periods beginning in 2017. Again, 2017 instructions. Typically, this is going to be more of a cash basis thing. And then the TIN number by filing due date. I won't go into these 2 items here. So there's a little comparison. Again, 2017 form instructions here versus the 2018, which aren't currently available. For more accounting information and accounting courses, visit our website at accountinginstruction.info.